Something strange happened while most people were sleeping. No breaking news alerts, no headlines on TV, no warnings on social media, but deep inside the global silver market, vault doors moved, inventories shifted, and positions were quietly cleared. By the time Sunday night rolled in, the setup was already complete. And if you're wondering why Monday's silver open shocked traders worldwide, you're about to understand why this wasn't an accident. This was an ambush. For weeks, silver prices looked calm on the surface, almost boring, the kind of market action that makes retail traders lose interest. But behind the scenes, pressure was building, not the loud kind. The silent kind. The kind that only shows up after it's already too late to react. Central banks weren't tweeting. Institutions weren't giving interviews. They were moving metal. Physical metal. And they were doing it when the market was least prepared to notice. Before we go any further, take a second to like this video and subscribe to the channel. It helps more than you think, and it tells YouTube that content like this matters. Here at Market Truth Archives, we focus on what happens behind the curtain, not the story you're handed after the damage is done. Now let's talk about COMEX. For years, COMEX vaults have been the backbone of paper silver trading. Futures contracts, leverage, derivatives, all resting on the assumption that physical supply is there if needed. But assumptions are dangerous in markets, especially when demand turns physical and confidence starts to crack. Over the last several reporting cycles, registered silver has been quietly bleeding out. Not crashing overnight, draining, ounce by ounce. Delivery after delivery. What made this weekend different was timing. Late Friday into Sunday, unusually large withdrawals were reported. Not the kind retail buyers make. These were institutional-sized movements, the kind that don't ask questions and don't wait for price confirmation. And when that happens, before a new trading week opens, it sends a very clear signal. Someone wants positioning locked in before price discovery begins. Ask yourself this. If silver was about to stay flat, why rush? If nothing was coming, why move metal on a Sunday? Markets don't move because of headlines. Headlines move because of markets. And the people who act first are never the ones explaining themselves later. As Asian markets prepared to open, liquidity was thin. That's when price moves hit hardest, and that's exactly where silver found itself. A vacuum. No resistance. No time for disbelief. Just a sharp realization that something had shifted. The opening price was Zen. Behustiger. It was aggressive, like a door being kicked open rather than slowly pushed. This is where the number everyone's whispering about comes in. $250. Not because silver is magically worth that today, but because that number represents what happens when paper promises collide with physical scarcity. It's a stress point price. A level where decades of leverage stop making sense. And the fact that it's being discussed at all tells you how fragile the system has become. Central banks don't chase momentum. They position before it. They don't need confirmation. They create Italiano. When they reduce exposure to paper, silver, and increase control over physical supply, they're not speculating. They're insulating themselves. Because when confidence breaks, liquidity disappears fast. Retail traders often ask why prices don't move when shortages are obvious. The answer is simple. As long as paper can settle paper, the illusion holds. But once physical delivery becomes the priority, everything changes. And the moves we saw this weekend suggest the priority is shifting. Think about the psychology here. If you were responsible for protecting a national balance sheet, would you wait for Monday morning headlines? Or would you act quietly, off hours, when markets are least liquid and least protected? This wasn't panic. Panic is loud. This was preparation. And that's what makes the Sunday ambush so dangerous. Most traders will only see the result, not the setup. They'll chase price, blame algorithms, or call it manipulation after the fact. But the real move already happened when no one was watching. At Market Truth Archives, we've seen this pattern before. First comes silence. Then comes positioning. Then comes price. And finally, the explanation everyone is given after the window to act has closed. The question isn't whether silver can move fast. It's how many people will still be standing when it does. Right now, silver isn't just a metal. It's a signal. A signal about trust, liquidity, and the limits of financial engineering. When physical assets start behaving differently than their paper counterparts, it's never isolated. It spreads. Gold feels it. Currencies feel it. Bond markets feel it. And by the time the average investor connects the dots, the move is already priced in. This week matters because it's not about a spike. It's about acceptance. Acceptance that the old models aren't working the way they used to. Acceptance that supply isn't infinite. And acceptance that price suppression only works until it doesn't. Watch what happens next. Not just in silver, but in how quickly narratives change. Yesterday it was nothing to see here. Today it's unexpected volatility. Tomorrow it will be no one could have predicted this. But you and I know better. If you've been watching this market for a while, you can feel it. The tension. The impatience. The sense that something is about to give. Sunday didn't cause that feeling. It confirmed it. And this is where I want to hear from you. Do you think this was a controlled repositioning, or the early signs of a much bigger breakdown? Drop your thoughts in the comments. I read them. They help shape what we cover next. If this video helped you see the market differently, share it with someone who still thinks silver only moves when the news tells it to. Because the biggest moves never ask for permission. They happen quietly. They happen early, and they happen to the people who weren't paying attention. Stay sharp. Stay curious. And stay with Market Truth Archives.